Hi Ron, it's Stuart here again. Hope you are well. I'm back in my normal office this evening. Hope you've had a good week so far. We've certainly had a good trading week so far. Excuse me. Four trades from last night all hit first target. Stop losses pulled down to entry, and the dollar's come back. We've reversed against some of those during the day when I was traveling. So four from last night are all good. Obviously, the main news of the day will be the Fed minutes coming up in a little over 5 minutes. So the issue with regard to the Fed minutes, guys, is really, obviously we saw that Trump's nominee, Professor Stephen Myron, he wanted a 50 basis point cut at the last meeting. Markets are currently pricing in virtually 100% chance of a cut next month, and more or less 95, 99% chance of a cut in December. That might still obviously change. There's still a long way between now and December. Still lots of data. And remember, Jay Powell is very, very data dependent, and that's the sort of trickle down effect he's had on his other members of the Fed. However, there's been lots and lots of Fed speak so far this week, and there's still more to come. Neil Kashkari is speaking literally 15 minutes after the minutes come out. Remember, the significance of the minutes is the fact that it's documented for the rest of perpetuity, for history. So we all know that Myron wanted to go 50 basis points. We know from the previous meeting that we had Michelle Bowman and the other Kevin, his name escapes me at the moment, top of my head, were looking for 25 basis points then, back in July. It didn't happen. This time they closed ranks with everybody else and just stayed with the 25 basis point cut. So backing up them fellow members, and it's obviously all to do with the politics that's swirling around it. Myron, despite what he might say, is a Trump nominee, is a Trump member of the government. He's obviously resigned currently, but he looks like he's going to be going back to that position once his temporary place on the Fed is come to an end. Doesn't look like he's in line to be the next chairman. That's interesting. Gone quite quiet recently. There was a lot of hoo-ha during certainly the early part of September about somebody the shortlist getting to President Trump by this sort of time, the beginning of October. Obviously, there's been other things filling his desk as well at the moment, but certainly Scott Bessent has been interviewing a long list, 10, 11 people potentially. But obviously, the position doesn't become available till May, so it makes a bit of a bit of a dead goose as far as Jay Powell's concerned between now and then. However, he's still got his hands on the tiller. He's still the main man. He's still the chairman. He's still got the veto if he needs it, or the final casting vote if he needs it. Anyway, we'll see what comes of it. But interesting reading for a change from the minutes coming out in the next 2 minutes. So I'll have a quick run through the markets. Obviously, gold, I'm sure you're all aware, gone to all-time highs today, over the key $4,000 here on the derivative market. The futures market's even higher. 40,050 we trade at the moment on the gold futures spot market. Indices remain relatively well bid. Nasdaq back up from a move down, sideways action over the last couple of days. Strong move on open this morning. This afternoon here in the United States, or in the United States. This afternoon here in the United Kingdom. All-time highs, intraday all-time highs here on the Nasdaq 100. The Dow a bit more, even more choppy. Big move down on open, and it's recovered. And the S&P 6,750. So all-time highs being pushed again. Last night we closed at a new all-time high. On Monday, 6,740. Also for the Nasdaq. The Nasdaq was up 0.7% on Monday. Last night we were up. Actually, we lost, didn't we? We lost 0.2% on the Dow. The Nasdaq lost 0.67%, and the S&P lost 0.38%. So 6,714 we closed last night, but we're up again. Excuse me, as you can see today. Excuse me. 7 o'clock evening time. Should have eaten earlier. So stocks bid. So stocks bid, gold bid. It all seems a bit mad, doesn't it? So let's just have a quick look at what the minutes may have said. They will have come round or getting released literally as I speak, coming across my terminal here. I let's have a look. There's nothing run through yet. I say the nuances I wrote in that little note I put up on Discord about who did Myron get any backing. It doesn't seem so from some of the comments the members of the Fed have said since, but it's a bit, the volatility with regard to the markets, it doesn't seem to make, it's not making much sense to me, to be honest, as a long time reader of the markets. We've got this gold at all time high for lots of different reasons. I understand the gold bid, this massive debt globally on all across the board. There's the argument that the tariffs are actually sort of equivalent of 1.5% of if they're getting paid, if the amount of imports are still the same for the United States, 1 to 1.5% of GDP. So that's positive, obviously, from a sort of a pure economic and numbers point of view. However, it's if they get paid, if these imports start to wane at any point, and also if this needs then replacing, what impact this is going to have on a benign outlook for inflation is at the moment. And the moment we haven't had this one uplift that Powell in particular has always been talking about. Minutes here. I'm just reading some of the headlines that are coming across here. Most likely appropriate to ease policy more this year. So that's actually quite dovish. So this hawkishness tone we were talking about before. Majority, we knew that, as all of them, emphasised upside risk to inflation outlooks. Majority. So is that all of them except Myron, or is it just there's few of the dissenters still kicking around, noticeably Michelle Bowman. So it's looking like easing further, which is what we've priced in, which is what the market's expecting, a 25 basis point cut this month and 25 basis point again in December. So let's just look at. We just come down to the 5 minute time frame. See how the negligible move there on our index trade, but that might not have fed through yet. Let's look at the more volatile, more rate sensitive Nasdaq. That's moved higher. This is the 5 minute chart on the Nasdaq, guys. So the Nasdaq is moving higher. We have new all time intraday highs for the Nasdaq 100 there. We look at the Forex pairs, dollar yen 152.85. So it was an initial spike for the dollar on the note there. So spiking to within a striking distance of 153 for dollar yen. Dollar CAD 139.60. So again, interestingly, we were down and then up. So, but we're now bordering to the upside, 139.60. And the euro 116.05 at the moment. We've had a leg lower in the last hour or so this afternoon for euro. Obviously, that's euro's very, very much hinged on what's going on in France. It didn't seem to be as bad as things first seemed this morning. I've been away from my screens. I've been traveling all day, so I've missed any comments from Macron or Leclerc. Obviously, he had 48 hours, and that came to an end this morning. So it was very new. Sorry for speech you really couldn't argue with from the outgoing Prime Minister of France. He said we all agreed we need to trim expenditure. We know the way to go, or where we want to go. Obviously, and that's been known for something like years, to be honest. But it's how they're going to do it. It's the how that's been the problem in France. Huge debt, 113% of GDP. The debt is way over what it should be. Way out of the EU parameters. Talking about getting it back down to 3%, even that's still too high. It's over 5% now. But anyway, euro was weighed this morning, positive this morning, or reacted positively this morning. Then it's been sort of chopping around a bit, 116. So we're still significantly under the 117 area for the euro area dollar. on the higher time frames, but just on reaction to the minutes at the moment, it's a better dollar reaction. See here the 5, is that only 5 minutes? So the 1900 candle to the downside. So dollars better, stocks are better, and yields will have twitched a bit, I would imagine, if that's we got a stronger dollar. Most probably to ease policy. That's the headline that most feeds are talking about here. Most participants judge it likely approach to judge further, but again, that's not real news. Is there any further in the statement? It's really what was said or how it's phrased, like most or only only one member. They may point him out, given that he's a new guy and he's obviously came to shake the apple cart up somewhat from the administration, and the other members of the Fed have pulled together. Obviously, there's still the issue around Lisa Cook ongoing as well. Nothing of particular surprise. Right, I've got some more bullet points coming through here. Cautious approach to future policy was warranted. Most participants judged it would be likely to approach to ease policy further. Hence, we went with a 25 basis point. Some participants noted financial conditions suggest policy may be not particularly restrictive. Some participants. Those participants judged a cautious approach to future policy was warranted. Almost all participants, i.e., everyone except Myron, judged downside risk to employment had increased. Upside risk to inflation had neither diminished nor increased. So these two golden mantras that the Fed have got: stable prices, full employment, obviously conflict with one another. And they've got a problem about stickiness of the inflation and this weakness that's been seen in the jobs market. So almost all participants supported quarterly a percentage point cut to the Fed funds rate at September meeting. Most participants judged downside risk to employment had increased, upside risk to inflation had neither diminished nor increased. That's repeated twice there. Participants generally note that judgments about appropriate policy action at September meetings reflect a shift in balance. A few participants saw merit in keeping Fed funds rate unchanged. Wow, that's really interesting. A few participants saw merit in keeping Fed funds rates unchanged. So there was a few hawks as well as Myron on that board. Dubs on that board, looking to keep things unchanged. And there's still this question mark over the likelihood of the December cut being as obvious as many people think. One participant, so he has been labelled out here. I understand that. So just before that, a few participants know that standing repo facilities would keep funds rates in target range and ensure money market pressure would not disrupt ongoing quantities. Okay, so a few of them thought things were okay as they were. Those ones that didn't look to cut rates. One participant preferred a 0.5 percentage point cut at last month's meeting. Fed staff revised up GDP. That's all it stays there. Right, revised GDP growth higher for 25 through to 28. A few participants are merit in keeping funds unchanged. We said that before. A majority of participants noted standing. We said that before. Fed stuff revised. We said that before. Inflation forecast mostly unchanged. Projected 2% by 27. Last month's jobs saw rising, but remained about worry. So hence the market's reaction to that at the time. And it's not going to change anything now. Those minutes really don't change anything now. There was no comment about Myron directly, never is, but it was interesting. There was an actual upside line there about one participant preferred the 0.5 percentage point rate cut at last month's meeting, and some participants still talking about nothing currently at this month. So there's clear divergence there, but the hawkishness, I would say, the tone of that is perhaps less than perhaps many were anticipating. I'm not quite sure what the pros on the telly will be saying, but that's my take of things. So let's have a quick scan on the Fed futures rates, the free one from the CME. Remember, we were at it's more or less nailed on for October, and it was, fairly as nailed on as you get for December, being this far away from that. So 92% now for the October. Oh, is that the December meeting? Sorry, that's the October meeting. And let's look at December. So it's come down a wee bit. So on that week goes 99%, 92%. That we get down by another 25 basis points. And no chance of a 50 basis point now cut. That's interesting, isn't it? A month ago, it was about 8% still. So that's cooled somewhat. Let's look at the December reading, 78%. So that has chilled quite significantly. A week ago we were at 89%, 82% yesterday. So those comments have chilled that quite significantly. It might have been, and there we see the move consequently in the dollar as well. So 78, under 78%. Now, it'd be interesting to see when that was last under 78%. I'm saying here a month ago it was at 70%, but it's been 80 into 90 as well, even for December. So that's cooled that December expectations relatively significantly. And a 21% of no chance from the cut that we're going to get in October. So 78-21, basically. 1% chance that we don't get any cut at all. So you get a very good price on that, but probability of that happening is very, very low, one would argue at the moment, given that we're just 3 weeks away, 3 weeks tonight, in fact, from the October meeting. So, hence the strength in the dollar. So euro down again, as you might have expected, a bit more analysis of that. So, euro's been weighed on other things as well, but euro testing the 116 area. If we just take this up to the daily time frame, you see the impact the chaos in France has had this week. So from 117.50 just at the beginning of the week, last week we were, in fact, last week we went to, we were 117.75, weren't we, at one point at the beginning of the month. This time last Wednesday, and here we are all the way down at 116, below these levels we'd seen during September. 115.75 was a support area at the beginning of August, at the end of July, and then we did test down here to 114 at the end of July. These were technical moves as well, but end of July, 3-day low there, 114.20. So that can't be ruled out, certainly, if the dollar continues to come back in the weakness and the euro continues. This appeared to be a bit of an outlier, this group, but perhaps less so. As you can see here, if we break below this 116 level, we had been pivoting ages through 117, but now we're back down to 117. Did I share? I can't remember. Was I sharing that? I might have had the Fed Watch tool on the wrong screen. Did I have it on the wrong screen? I can't remember. I didn't have it. Did I have it up here? But anyway, if I did, sorry, apologies. I was staring at the wrong screen. But there's the chance of 50 a 25 basis point cut from what's really expected to be a nailed-on cut in this for the December meeting. 78% now, but as I said, that's come down quite significantly to 78% from over 90% it was not so long ago. A week ago, it was 89%. So and the nailed-onness, if you like, of 3 weeks today is down to 92%, where we were at 99. Yeah, here we are, a week ago, 99.4, 95 even yesterday. So that's come off relatively quite significantly, hasn't it, in a week or so? And that's this, obviously, the lack of data now because given the government shutdowns going into the 8th day. So there's lots of, obviously, geopolitical things swirling about, chaos in France, the fact that the US government is shut down and it's continuing to be shut down. We're into our 7th or 8th day, I think. Obviously, the surprise in Japan, with their own Iron Lady getting appointed, so a potential era of Thatcherite Reaganomics coming out of Japan. So a cooling of rates there, which is obviously seen the yen weaken, not historically, but as we saw earlier, dollar yen 153. And if we just take this up to the weekly chart, you can see, we haven't been anywhere near over 152 since February. So it's almost 10-month highs for dollar yen. It's the weakness of the yen that's really driving this. Obviously, on the expectation of what the new prime minister breaking the glass ceiling, first female prime minister in Japan's history. See what mark she wants to make. It's like the mark like Thatcher made in the UK. There'll be many people that won't forget it, that's for sure. So 152.90 dollar yen to the upside. So yen's very much in focus. All of that might have cooled gold a tad if the dollar's picked up a wee bit. There's the day. It's the weekly, isn't it? We were higher earlier. We just come off a bit, so 4,040 at the moment. If we just go back to the 5-minute chart, see how that's reacted to the minutes. And again, it's a stronger dollar has pulled the gold market down. Obviously, you've had some fantastic runs for gold recently, and hence the perhaps increased volatility on that data. So a big move, relatively a big move for the day to the downside for gold here, following those minutes. So the high time frame still remains nicely bid, but here the 5-minute have rolled over ahead of the main news of the day. But we're still $40 north of that hugely psychological 4,000 level for an ounce of gold. Oh my word! Oh my word, indeed. All sorts of reasons driving that gold market. No more so than some of the central banks, some of the big countries still gobbling it up. This worry that finally these massive debt mountains may be getting may need to get addressed. So the bond vigilantes. Will they show their hand again? We shall see. Yeah. So again, the minutes do show that relatively divided Fed. Remember, they papered over the cracks a wee bit. You'd say at the last meet that meeting we've just seen because of the input of Myron. However, there was plenty of people being as dovish, not as dovish as he was, but certainly shaking the dovish. Claxon and the dovish plots, that seems to have been sort of papered over to maintain unison on the board, and then also this threat of threat of independence around the Fed. So we shall see. So one said, few said, may say, and it was certainly that one said was the note that caught my eye. Out of the numbers, out of the minutes there. So participants, generally most participants, some participants, a few participants, and the key line, the majority of participants emphasize upside, the stickiness maintained, and they seem to have been proved right somewhat. I've lost where's the actual phrase. I just want to quote the phrase I'm looking at. Actually, let's have a look at it together, can't we? Is that from their website? Deputy. Uncertainty around the projections is over elevated primary. That's around beyond current conditions and economic outlook conditions. Moves up since the last layer with regard to the outlook of inflation, but generally expect monetary policy inflation will be somewhat elevated. So they've left that in somewhat elevated. Labour market, with regard to the outlook, labour market generally expect. Revision is reason somewhat elevated again, somewhat elevated. Well positioned to respond to a timely way to potential economic developments. So deep down, discussing risk management, outlook. Several participants remarked on issues related to Fed's balance sheet. We talked about that. effective and open my original notice conduct standing repurchases. The vote was in company approval of statement at 2 p.m. recently negotiated. A statement we saw, but his action, I guess his action was Stephen Myron. So it was a universal, they stuck together. So Michelle Bowman stuck there, and Chris Waller was the guy's name I couldn't remember earlier, stuck with the team just to go with the 25 basis point. And Stephen I. Myron looked for a full 0.5% print. Myron preferred to lower the target rate to 0.5 percentage point in this meeting in light of the further softening in the labour market over the first half of the year and underlying inflation that, in his view, was meaningfully closer to 2% than it was apparent in the data. Governor Myron also expressed the view that additional policy easing was also appropriate to reflect that the natural rate of interest had fallen due to factors such as increased tariff revenues that had raised net national savings and changes in migration policy that reduced employment. Again, this is the current administration's policies that we're still yet to see the full account of that to come through, one would argue, which is what the other members stuck to their guns. Very, very sort of obviously political, and in light of the administration's view there, that's why some of the criticism of Stephen Myron being on the board has been so. Anyway, they stuck together this time. Happens next time. See what this again. He may go again, and quite probably will. The next meeting, if this data continues, government shouldn't still be shut down in 3 weeks, but heaven knows what's could possibly happen. Anyway, stock markets continue to push higher, and they've just pushed. First 15-minute candle was positive from the minutes and cooling a wee bit, but we are at all-time highs. 325,100. The Dow 46,700 today, 46,800 today, this afternoon, and all remain bid. So if I just have a quick look at what may be looking on my trading platform tonight, a quick check of that. Where's it gone? My platform's not my trading platform's not going to work on here for some reason. Oh well, that's a shame. No, it's not. It's not working. Let's have a quick look again. There we are. It's restarted it down here. So there we go. It was relatively interesting. He was not named, but this continual idea that they've had, all year. And to be fair, they haven't really changed their tone. They've said that they're dependent. They've had a lot of criticism about being behind the curve, understandably so for this time, but they're stuck to their guns, and they're still facts of tariffs haven't yet been seen through. The administration is saying the exact opposite of that. They need to cut very quickly, and now they've got an inside man on the board saying exactly that. 50 basis point. You might say again, 50 basis points in the next meeting. Obviously, this is only a temporary appointment. It runs out into the second half. Oops, oh dear! It runs out of this first quarter of next year before, obviously before Jay Powell goes. But he is now inside. Not supposed to be speaking to anybody else about it, but people talk. He's a member of the Trump administration at the end of it, so who knows what comes of it. Inflation remains their big mantra, is really the takeaway from that. And again, so it doesn't really change anything. They still was a majority see that as the worry, see the stickiness, particularly in the services inflation, and obviously now worried about the unwinding of the labour market, given the immigration crackdown and the tightening of the jobs market. But as I say, we didn't get non-farm payroll. It's scheduled potentially to be released on Friday. Whether that actually goes ahead or not, only time will tell. And we'll literally not know until Friday, I would guess. But certainly plenty of other Fed speak chatter. The weekly claims tomorrow obviously isn't happening as far as I know, but this speech by Powell possibly is. Well, that is actually that's still happening. Mishki Bowman as well, scheduled to speak tomorrow. So we'll be live around this time tomorrow for what would be the weekly claims normally on a Thursday, like we are. Vice Chair Barr is also, I say, lots and lots of chatter. The bond auctions are going ahead still, as we saw today. The 10-year note came out much higher than last time at 4.117 from 4.03. So it's over that area that Stephen Bassent wants. So and that's what you said. Back in January, that's what he focused on, didn't he? He focused on the rate of the 10-year yield. That's what he's built his reputation and his business on over the years. And one thing I did forget about earlier this morning, I mentioned it this morning on our Discord group, was a big surprise from the RBNZ. Remember, central banks still have the power to surprise, and we saw those when the Kiwi whacked lower this morning. So big surprise. We had a 50 basis point cut from the RBNZ, talking about needing to take action and worried about the outlook for growth in New Zealand. So it took very drastic action, brought interest rates down to 2.51% by 50 basis points from 3%. That was a big surprise. It'd been nailed on for a while that they'd move by 25 basis points. The fact that the RBA, obviously, they're not related or anything, but they're close Western allies in the deep south of the southern hemisphere, and big trading partners with local Asian countries in particular as well. But they didn't move back in Australia. Things are a bit better in Australia than they are in New Zealand. So it was a surprise that they went that far. But it's happened before. The Bank of Canada did a similar thing. So that was a major surprise. We saw that big move in the Kiwi across those trades that we'd taken last night as well. Perhaps we would have got to our target, but perhaps not as quickly as we'd anticipated last night when we took those trades. So just putting the Kiwi trades, we were short the cable rate. We'll come back to that in a minute, and we were also short Kiwi against the dollar. And that was the big surprise. Just go on the hourly chart. So we were short at up here somewhere. Our target was 57.80. We entered at 57.97 up here somewhere. There we are. That's exactly where we entered, around about 9 o'clock last night. We were around here at 57. We got entered. Our entry was 57.97.6. Our initial target was 57.45. Which was down here somewhere. Here we are. It was hit as the data came out, and then during the early part of the European session we came back, but I'd pulled the stop loss down to entry here, so we can't lose on that second half, and we'll see where that pans out. The dollar's this is the weakening of the dollar today, so it's come back a bit. The Kiwi's come back a bit. Since that shock announcement, but euro similar move to the upside, and it's come back. It's given all that back. Sterling, which is the other trade we had sterling. We were long again. It's given most of in fact, it's given all that back, like it's given all the euro back. So that would have it's probably still open, but certainly hit target 1 and an extended target. We'd had it up. And the other one was the Kiwi against the CAD, which obviously we were short on that one as well. And again, a bit like the dollar, that hasn't given as much back as the euro and sterling have, but certainly it's hit target 1. Stop loss is around entry, so second half can't lose, but we'll see where it goes later on. So that's still open. Half a position is still open on all of those positions. The other position we took last night was a short for sterling, having lost on the one from last week's time. Pound USD. And that was, we had a target of 42 pips, which was hit. We banked 21.5 because we took half the position off. I can't remember what the actual price was we got filled on that one. Let's have a quick look. Let's go to here. So there's that losing trade on Monday. Came within a pip of getting stopped out on Friday. I left it over the weekend. But it did get stopped out. 43 pips, 33.5 pips on Monday. We lost that. So it was 33.85 was our target to the downside, and we got in at 34.27. Was that it? There we are. That's where we got in. So we've been taken out this afternoon again. So that's our entry. That's our target, which we got to. The stop loss was pulled down to 20, so that's closed now completely because it's reversed back. It's hit target this morning, and I haven't looked at it since. I didn't. In fact, it was before then, so I didn't see it retracing that one. I would have got out there in that big candle there at 8 o'clock, but I didn't see that. I was starting to travel. But anyway, the stop loss was had been moved to entry, and that's closed out now. So that sterling trade is closed for a 21.5 pip. Game, but we're moving back down, haven't we? We've moved back down, but so if we hadn't kept our stop loss where it was, I'd moved it to entry, but I wasn't watching it. I was away for the day, so we'd been spiked out at 3 o'clock, 2 o'clock this afternoon. Anyway, that's the way it goes. But the trend is still to the downside, isn't it? Clear on the hourly time frame, the 4 hour still down. You know, if you'd had your stop loss around the 20 midline of the Bollinger Band, you'd still been in that one from last night. And the daily, that's that. So, again, if you left your stop loss up here, see how we close today. Might pull it down halfway through that at the end of the day instead of getting too close as I did, and see where we go. Next support there is at 33.36 or 33, so it's 133.40 is the next downside target if we break below here, because we have support from the beginning of September at 133.90, 133.90 here, the 22nd of August, and the 11th of August burst through as we were rallying strongly, so that was a bit of a retrace into that area. So it's still a breach under this tonight, and we could quickly get down to 133.40. But we need to close below literally where we are now, which is 133.85, I'd say. Interesting. Euro hire as caretaker French MP Prime Minister says they could have a new Prime Minister in 48 hours. So so the government hasn't fallen apart. It's interesting. Lots of things have happened today, which I've missed. So I'll go and bone up on all of that. So that's helped the euro. And there's a note running here. Carney had a meeting with Trump on the future of steel on auto sectors. Well, that was yesterday, wasn't it? Has that only just come out today? Or they've since spoken on the phone? It was all crazy loud press conference last night with Carney looking a bit perplexed, but relatively happy. I mean, he's a very, very sharp cookie, Mark Carney, and he's becoming quite an adroit politician as well. And he's had quite a bit of criticism. He stood up to Trump initially, and then he got a lot of criticism about he mishandled Trump. But he seemed to be quite a bit deferential to him in the new gold of the White House Oval Office press office. But yes, it's very raucous press conference. But anyway, so sterling down against the dollar. Right, I'm going to wrap this up, guys. It's 7:30 here in the UK. I'm going to go and have my dinner and perhaps a little drink. You never know. I'll see you tomorrow for round about lunchtime for the round about lunchtime my time. The what would be or would have been the initial jobs claims, and for this Powell speech. The Powell speech is definitely happening. So I'll see you for this as normal. 12:30 Universal Standard Time, or GMT. 12:15 it will be live. And if the jobs claims come out from last week potentially, be interesting to see if that actually happened. I don't think that's going to happen from what I can gather, but to say that might have happened. That news might have broke whilst I've been away today. So take care, everyone. May the pips be with you as ever. There's no question. Aldo says hello. Hello, Aldo. Hope you're good. Keep in touch. I sent you a message earlier. Oh, presumably that's why you're here. Good man. Take care, my friend. I'll message you in a minute. Okay. All the best, everyone. See you tomorrow. Take care. Bye bye.